Joining us right now is Jeremy Siegel, who is professor of finance at UPenn's Wharton School of Business. And Jeremy, I just want to get your thoughts based on what we were just talking about with Steve, with Rick before that. I mean, the Fed's signaling yesterday, Jay Powell saying that it's going to be 25 basis points. Obviously, they're watching to see what happens in Ukraine and with Russia to see whether they should be taking this more slowly. How does that play into your thesis, which is that the Fed's already been behind and that inflation is going to be stronger than a lot anticipate, be there longer than a lot of people anticipate, and require the Fed to do even more?
Yeah, and I actually think it would be a big policy mistake to slow down because of the Ukraine. I mean, we had this situation in the 70s with oil prices going up, and Arthur Burns was chairman of the Fed, and he decided also, well, the economy's contracting, let's put more money into the system, and that proved to be a huge policy error. Unfortunately, you've got to take the medicine, and I'm very disappointed. I think the Fed should go 50 basis points. The first time in March. He did open the possibility there would be more. I actually think the 5.5% to 6%. Steve mentioned that hikes that they're going to have to do much more than that. And I'm actually disappointed that that Chairman Powell did not look at the history, saying that this is not a time for us to slow down. And I think he will come to that realization. I was also disappointed, by the way, that he said that, we really didn't formulate a plan for the draining off the balance sheet. And that disappointed me, too, because that is also very important. I mean, I spent an hour actually interviewing Fed President James Bullard from St. Louis last Friday, and he said we got to be at least at 1% in July, and implied we got to be probably at 2% or more by the end of the year. Although I'm willing to look at what that situation actually is. He's on the committee. He's a hawk. He could dissent. I don't think he will the first time. He said, I'm willing to give 25 basis points the first time, but he said we're going to have to do 50 basis points after that, and I think he's perfectly right.
Hey, Jeremy, Jay Powell is no Arthur Burns. I mean, he has a much better grasp of the markets, a much better understanding. And I have to say, listening to him yesterday, I like listening to him. I feel like he's in command and control. He gets these things. He's also pretty smart about how he says things politically. May not be ready to shake the markets and say we're going to do this pretty steadfast with all of these rate hikes coming through. I didn't get the sense listening to him that they are going to go that much slower. To me, kind of reading through and listening to hours of that testimony yesterday, it sounded to me like, he knows that this is an issue. He knows that they need to be moving on this, and he's not going to say anything to shake the markets up right now. But that was just my interpretation. How about yours?
Well, certainly we saw when the 2-year rate went up 18 basis points, when he opened up the fact that we're going to have to go faster. I think that the market said that. But we also have to admit, Becky, that the Fed has been terribly wrong over the last year. I mean, all this temporary inflation. Look at their projections for inflation that they did last year, so way below what actually happened all the way to December. And listen, Jay Powell is a very, very good man. He's a good communicator, but the Fed has been very wrong, and they're going to have to catch up, and they have to and really have to admit, we got to bite the bullet here. We got to defend the dollar here.
If they
we talk
do
about
25
Bitcoin
basis
taking
points,
over. We got to defend the dollar.